Hi everyone, and welcome to Mish's Market Minute. I am your host, Mish Schneider. And once again, as always, we have a lot to discuss. So I'm calling the theme for today, the old and the new. So let me tell you what I'm talking about. What we're going to do is we're going to walk through the current macro picture. We're going to take a look at the stagflationary indicators. And since we've recently done a whole segment here on emerging markets, which by the way turned out to be very, very good, I want to look at one particular emerging market that we followed and have been following for a while. But then let's go on to the new. There's been a bunch of newer issued released stocks, and some of them are of real interest to me, and they are very heavily dominated in the healthcare. So of course that's been a hot place to look, and these are stocks that you may or may not have heard of. So I thought it would be fun to take a look and give you some actionable information. So let's get started first with the current overall macro picture. I want to look at my economic modern family. Then we're going to turn to gold, silver, copper, which I also pointed out in a daily 5 a couple of weeks ago. We looked at all the metals, including palladium with that. And all of that is part of the stagflation theme, but since we also have done a lot of talking about the grains and the food, I want to get a fresh look at that. And here's my emerging market that I wanted to cover, which is Vietnam. So let's start first with IWM, the granddaddy of my modern family. For the modern family charts, we're going to look at the weekly charts, then we're going to move off to the daily charts for everything else. And of course, as usual, we've got the price, we've got the moving averages so we can see the phase, we've got the price performance against the key benchmark, and then our real motion indicator. All of these plugins are still set to come online for you guys at StockCharts very, very soon. So looking at IWM, the bearish sentiment out there is palpable. However, the poor bears seem to get trounced on. Every time there's any kind of sell-off, it is met by buying. And really, if you just take a look at the chart, the bearish sentiment is somewhat justified in that there's a real lag between what's happening in the small caps versus the small cap growth stocks, which we also did a segment on Zebra, HubSpot, VBK. All of those things are rocking and rolling. And of course this, which represents more of the manufacturing, and of course is going to suffer as a result of COVID-19 and now the new surgence of cases, etc. However, really what you've got going on here is, other than the fact that we're in the bear phase and that the 50 crossed below the 200, other than that, we're really basically, if we look at from the lows to the high of before the whole crash happened, we're sitting at around 50% and we're consolidating there. Now it's possible that on the charts here we're looking at a weekly bear flag forming, in which case if it breaks down, let's say under that 137, then I think we would look at a weaker market overall. That would drag everything down, including the old mighty NASDAQ. But if we can manage to hold above 137 and continue to consolidate in this range, then that wouldn't be too bad. And really what it's reflecting is the hope of more Fed stimulus, the hope of more government participation in terms of forgiving loans and maybe possibly even giving out more money or extending the unemployment benefits. The market is living on hope. And more importantly, the market also is not watching just the surgence of the cases, but how much it's going to impact businesses that are already open. And even more importantly than that, how much is it going to affect the death rate? Now, on the total flip side of that, this is granny retail. Now, retail, this is the brick and mortar retail. I did a whole piece about this, and you'd see it on StockCharts in my blog section. And I find this to be completely fascinating for a couple of reasons. Number one is that the retail brick and mortar has been suffering for years. And of course, we've seen the malls become like ghost towns. We've seen so many businesses file for bankruptcy, and now more recently, more filing for bankruptcy. And of course, people aren't going to the malls with social distancing, although at least I know in New Mexico, they're open and they're not that uncrowded. But what's so interesting about it is, from a technical standpoint, this is holding up so much better than the IWM or the Russells. Here we have the 200 and the 50-week moving average, and you see this price for this week. So far, we're holding up. Now, the actual closing price as of Thursday is sitting right on there. So we're going to look 43.44 is going to be the key number that we want to see hold. If we're looking at the IWM under 137, and this breaks down under 43.44. I would certainly get more defensive in the market, possibly look at volatility or look at buying the bonds, which shot up, or maybe even buying the dollars, because what happens is that sometimes the dollar gets bolstered as treasuries wind up the yields falling. But whatever, risk off at this point now has also been kind of dicey. And yet, on the flip side, if this holds here above the 200 week, that would be a good sign. Now let's take our eyes down here. It's well outperforming the benchmark. And in terms of the actual real motion, we have here well over the 50-day moving average, and even though we haven't quite gotten it up to where we were when we peaked up here and up here, we are at least approaching. So one more push up and we could actually start outperforming in momentum, which would be good for price. Now, more importantly, what this would mean for the overall market and economy is that forward thinking. Perhaps people are just tired of ordering online and staying at home and want to go out and shop. And we are a consumer-based economy. So I've got big eyes there in terms of the overall macro. And then, of course, we have to look at transportation, which is even lagging behind the supply side of IWM. This is the actual demand side, and you can see that demand is low. However, although in a weekly bearish phase, we are having an inside week, which means this 10-week moving average, or let's give it a little room under 157, would spell some trouble. But on the flip side, if we can take out the highs of last week, or really basically, let's call it 170, 168 to 170, that wouldn't be bad, particularly in conjunction with everything else. Now, of course, this is underperforming. And of course, there's no divergence here on the real motion. It's actually below the 50, just like it is here. So everything is pretty much in line. But more importantly, the inside of the market, the three we just looked at, we can't say is all bad, because the IWM is around 50%. This is slightly lower, but holding an inside week. And retail, of course, is showing some signs of life. Now, if we move on from there, and we go to some of the top performers of the modern family, this, of course, is IBB. So this is where all the money, or a lot of the money, is going. And you can see it right here. Remember, we talked about this a few weeks ago, and I mentioned that it was having a classic breakout of a channel. And this, of course, had peaked in 2015 up until this year. No surprise, money going into biotechnology and pharma. And when we get to some of these new issues that I'm going to talk about later, a lot of them are going to be in this space. And so right now, with the rest of the market faltering, this is holding above 140. And 140, I think, is going to be a good pivotal area for us to watch. This is an interesting doji week we're forming so far, which means the opening price of the week could turn out to be the same as the closing price of the week. We'll see what happens Friday. But nonetheless, 140 is going to be my first big area of support here. And then we can look at 136, 137 if it falters. Any dips in this right now still looks like a buy opportunity, provided you know where you're risking to. And I would say 132, 133 would probably be my bottom line. Well outperforming the SPY. And look at the momentum. Momentum, as is making new highs in price, is also making new high in the momentum area. Now this here is semiconductors. Talk about superstars. This also, we talked a lot about the consolidation that it was having over the last several weeks. It took out that consolidation over 155. 160 was actually a target. If you were long, you should have been selling today some at 160, just because it was a target. And that was a target coming off of the breakout that we had all the way down here over 140, or at the bottom of this consolidation that we had. However, if we look at 140 basically to 155, $15, it could actually go up to 170. So when I talk about a profit target, I mean a partial profit target where you move up your stops and then you look for your second profit target, or about $10 higher. So well outperforming here, and the momentum is increasing as well. I mean, chip technology in this COVID world is just going to continue to be hot. And on top of that, you have a lot of the younger generation buying here, particularly through that Robinhood account. Now, also, and last, and definitely least, is our poor prodigal son regional banks. Now, this obviously is doing the worse for a lot of reasons. Interest rates being low would be one. People saving money and not necessarily borrowing money is another. And also just the whole banking sector. You had the mixed bag. I also did a whole bit on that a couple of weeks ago on the Volcker rule being rolled back so that banks could actually start investing money, but it meant more big banks, not regional banks, versus the fact that they couldn't do corporate buybacks and that they were decreasing their dividends. And that's what you're seeing here. The big news about the banks, of course, is going to be the upcoming earnings. No one's expecting these earnings to be great. It's going to be a matter of how much they exceed or decline for the expectation. Just like what we're seeing with the jobs claims. I mean, people are still filing for unemployment benefits, but because it was less than it was that was expected, you got that initial boost in the market. And that's how it works with this. It's always going to be about whether something meets or doesn't meet their expectations. But anyway, from a technical standpoint, I think you got to look at a couple of things. First of all is the 50-day moving average, and since this is a weekly chart, you don't see it, but that comes in at around 37.50. So that would be one area to look at. And when I did that segment for you a couple of weeks ago, I mentioned how to play it going short against the breakdown of that moving average. Well, really, that didn't happen for you until this week. And again, I said, don't marry that short position. It's really more of a kind of a mini swing type trade. So now we're going to be heading into some support right here at about 32. But remember I showed you how with the IWM from the high to the low, we were somewhere around 50%. That happened here. We are now approaching down to the dangerously low levels. So a lot is going to depend on what happens with the earnings. And of course, can this drag the whole market down? This has been a great barometer to me for the past. And I would say absolutely we're going lower just looking at this, except for my little secret granny here, my little XRT secret. This is the thing that's giving me hope. However, as you know, I'm looking for the economy not to really totally come back in any way, but more stagnate with the advent of stagflation, thanks to all of the money supply that's been happening and all the stimulus out there, and therefore creating some kind of a hyperinflation in terms of raw materials while the economy stagnates. Another piece I did, I always try to bring everything together. There's nothing new here, just adding layers, is when I did that whole piece from the 1970s a while back. So here's gold. Now gold, I've been telling you about gold for weeks. Buy it, buy it, buy it, every dip buy it. Now what's so interesting is we finally cleared that key 1800 in the futures, but yesterday I took a profit at 170.50. And now you can see we got a little bit of a pullback here. One might even say, and by the way, we're at a daily chart right now, that it was a little bit of a reversal pattern because we actually closed under yesterday's low after making a new multi-month, or in this case, multi-year high. So I would not be buying gold right now unless it either took out the high or gave us about a 5 to 10% move lower from here, which would mean really it could go anywhere from down to 165 again, down to even 155, and that would certainly freak people out. But nonetheless, overall, the balance sheets on the Fed has actually declined a little bit, but if they start building up that money supply or if the market falters, I would not expect this to fall too much lower. And you can see here on the price performance, it's still well above the SPY. And on the momentum after peaking, obviously there's no divergence, but it's falling as a little bit as well. Silver to me is probably even a little more interesting right now, especially if we're looking at a stagflation environment, because we want to see silver ratio to gold start to flip. It was at 8 to 9 year lows, and it looked like it was going to flip a little bit more today than it actually did this morning, and it still actually flipped a little bit. So when the silver starts to outperform the gold, not in price but in actual performance, that's always going to be an indication that stagflation could be coming. So right now I'm very, very friendly. We actually took some profit in the silver yesterday as well, and again, this could be a reversal pattern. What we would have to see now is if this actually closes below today's low, which in silver was at 1722, and I say today being Thursday. If Friday we close below 1722, then I would think that maybe along with the gold we'll see more of a correction. But if it holds it, has an inside day, and then opens up well on Monday, then I might be looking to this. And I think a pretty good risk at this point would be on a more active trade using under the 10-day moving average or somewhere around 1690. Outperforming, momentum came off a little bit, but still doing very well. And now if we move on to copper, this has been the big surprise. Of course, I pointed out copper to you a while ago when I showed you that it had cleared the 200-day moving average and was consolidating and has now made a nice move up. Now, why is copper so interesting? Because from an economic recovery standpoint, this really represents not only a possible stagflation just for the need for raw materials and hoarding, but also the fact that copper is used a lot in the housing industry. The housing industry has actually been relatively strong. The trend has changed in that people are trying to move out of cities into more rural places because they feel the infection rate is less, and that's a big part of it. But also, I mean, if we just look at a test audience here in Santa Fe, New Mexico, although housing sales have gone down, the prices haven't budged. In fact, they've gone up, but inventory has gone down as people are coming in, bidding on houses and buying them right away. So watch this copper very carefully for both reasons. Along with XRT, if there are parts of the economy doing well, I think the mistake that people make is they think that the whole economy has to open up and everything do great. Well, you know, that hasn't been the case for years, by the way. What we want to do as traders, we want to see where the economy is doing well. And if it's going to be retail, so be it. And if it's going to be in housing, so be it. And if it's going to continue to be in technology, so be it. If banking is going to be a big meh, so be it. So we have an inside day. Keep your eye on this. And I would say right now, this really has to hold up at around that 42 level is going to be my point to be looking at. Look at here how well it's outperforming and look at the momentum flying. Of course, it could get a little frothy. That would be another opportunity to at least take some profits if you're in it. And finally, I want to show, instead of showing the individual soybeans, corn, wheat, I'm going to show it to you through DBA, because DBA I've talked about with you guys now for quite some time. And essentially what we're seeing here in DBA right now is the fact that it has cleared the 50-day moving average. Remember, I was showing you the divergence back here. This is when I started talking about it. And I said to you, what did I say to you? Do you remember? I said, when you have a divergence in the actual real motion where it clears the 50-day moving average, but the price is under the 50-day moving average, all you have to do is wait for a confirmed phase change, which happened here, and then you can buy it, and you can see now the momentum is increasing. This does look like it's bottoming, and if you look at soybeans, corn, and wheat, they have done very, very well, not only because of some USDA reports, but the anticipation is that even though they're expecting maybe some weekend rain, then they're expecting a major heat wave and drought to hit these growing seasons, and that's on top of the food chain supply disruption, the deglobalization and the food hoarding, and the low labor force. So this is why I keep saying to you, I'm looking for stagflation to start from food, even though we've seen a little bit of a signal going on there with the metals. All right, now finally, in the old school part of our presentation, we're going to look at Vietnam. Emerging markets, by the way, that chart exploded, and this is still underperforming. So that's why I wanted to show you there. EEM took out the 200-day moving average and exploded, and I gave you all those charts to look at a while ago. Hope some of you bought them and made some money. But in the meanwhile, we're long Vietnam. We're long from down in here. We're waiting very, very patiently for this to take out the 200-day moving average and keep going. Would I be buying it right against the 200? No, but I would probably wait for a close maybe Friday and maybe Monday, or at least 2 days in a row. Remember, we need 2 days for a phase change confirmation to get into this. And then you could probably risk down to around 1380, or if you really wanted to take a bigger risk, you could use that 50-day moving average to under 1350. It's definitely outperforming here. And even though it's not above the 200, remember, we were looking at this too as a divergence a while back. Now you can see it's well above the 200 here, even though it hasn't cleared yet. So that's that confirmation that you want to look. Okay, let's go on now to the newer issued stocks. We're going to look at a biotech stock. insurance stock, an investment stock, a couple of other biotech stocks, 3 more, actually 4 more. So we're heavy in the biotech. So let's get started with the first one. This is ETNB 89 Bio. What they do is they're a clinical stage biopharmaceutical company that focuses on the development and commercialization of various therapies for treatment of liver and cardiometabolic diseases, interestingly enough. And one of the fallouts, by the way, that we're not hearing so much about from the virus has not been the virus itself, but has been heart attacks have increased and cancer has increased for 2 reasons. One, people are staying home and not exercising and eating more. And 2 is they're not going to the doctor and to get their follow-up visits because they're afraid of going out. So this is an interesting little stock to watch, ETNB. And what I like about it, we don't have enough information for real motion, but we don't have a 200-day moving average either, by the way, because it hasn't been around long enough. But we do see the 10 crossing over the 50 here. We're a little bit above it, but we're consolidating after this big bar here. So what I'd like to see right now is for this to hold 30. You know, I want to play you have 2 choices in this market. You either play everything tight, 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 or given the volatility, you play things much wider, which would mean to go under 25. But if you're going to use the tighter stop and you're going to see if it hits 30, what you want it to do now is break out over 34. So you have a 30 to 34 range to watch here. And then I would see whether we can get some momentum. This thing really consolidated for a long period of time. So that's number 1. The next one is called HUIZ Holding Limited, trades in the NASDAQ. And what this does is it offers insurance brokerage services in China. So, you know, I feel like I've done a lot of these because I keep saying I've done this before, but remember we did a lot of China focus, Plug, Fuel Cell, a couple of other stocks, Chinese health stocks. So it's interesting that this would come up as a new issue, this Chinese stock, and it's a cheap stock. It's trading only at $9. But what I like is that it gives insurance against illness and disease, term life and whole life. I would imagine that that could be something that's growing in China. And right now, again, not enough information to get real motion indicators here, but we have a good move over the 50-day moving average, and we have a good move over the 10-day moving average. And what we have here for as of Thursday is another inside day. So, you know, with these smaller stocks, you got to give them room. You have a big wall of support here down at around 820. And it looks like now if it can clear over this high right here, then probably, and that looks like it's about 10.05, 10.10. Then again, look at where this was. These new issues, this new issue stocks, by the way, this one is about a year old, but this was trading all the way up at around 13, 14. And even though we don't have real motion, well outperforming the benchmark. The next one is Kimball Royalty Partners. Now, what's so interesting about this is I also did a whole piece on natural gas this week in the blog, if you look, how it had an island bottom in the actual UNG ETF. So it interested me, not only the Buffett news, getting involved with Dominion and the natural gas part, but then this comes up as a new issue on my alerts. This is, they own mineral and royalty interests in oil and natural gas within the United States. Now, it's not exactly clean energy, but at least it's not exactly fossil fuel. And again, we've got a lot of buying coming into the clean energy space, which I think is great. But what I do like about this is that, unlike what I just showed you in the others, this now has a very clean risk if it can hold the 50-day moving average at around 790. So we are underperforming here, but we are still above the 50-day moving average, and you can see the divergence here when it cleared the 200, and here it never got to the 200. Remember how I just showed you with Vietnam how important it is to wait for the price to meet up with the divergence that you see in real motion? I'm going to say the same thing here, in that you want to make sure this doesn't break down in momentum under the 50, because that would not be good. So I would say if you're looking at this, I'd probably want to be getting involved over the 10-day moving average, maybe over 830 with some, and these, by the way, are never lines in the sand. They're areas with a close tight stop under 790, and maybe you can get some traction out of this one as well, especially if the natural gas market holds up. Now the next one is KURA. This is KURA Oncology. and they develop medicines for the treatment of cancer. And they really are looking for things that target the cancer. And I've heard a lot about this in the news, about not only just curing cancer generally by giving you a major radiation chemotherapy type thing, but actually starting to pinpoint exactly where the cancer is. So that's exciting in the field of medicine. The stock itself is doing pretty well. It made a nice big move here. I'm going to guess that was probably earnings. And now, by the way, earnings coming up, you should always mind your earnings dates of anything you get involved with stock-wise. But you've got 1646 here as your support from the 50, then 1721 from your 10. And I like this 1750 as even a tighter area. If we can hold above 1750, it's possible that this thing could move up into new highs. Right here, we're outperforming. The momentum, of course, is well above the 50 as well. So we want to see that hold up. And this is a vaccine company. So basically what they're doing is developing vaccines, but not just for COVID. They're developing vaccines to prevent and treat any infectious diseases, hot topic these days, right? So right now, what you're seeing here, and by the way, the name of this company is Vaxcyte Inc., but the symbol is PCVX, and they're out of California. And that's this, you want to talk about a new issue, this is a new issue. Okay, it's not a very old stock at all. So the day it opened up was all the way down here. Within a few days, it made a high of up here. And since then, it's been coming off a little bit, but really in a tight consolidation range. And since you don't have a lot of historical data here, we're not going to have anything to show you real motion, price performance, or even much in the way of moving averages other than the 10. So let's use the 10. So I'm looking at a move over 3080 is my number. And I've tweeted about this. So if this can get over 3080, I think you probably have a good risk here. You can either go under 29, or if you wanted to use the absolute low here of 2750, because if this is something that, you know, you can come up with some kind of good news in this, and the next thing you know, it could be flying. So when you trade these small stocks, and small, this is not so small in price, but a new issue, low volume, thin, etc., always remember to either use a very wide stop, or if you're going to use a tighter stop, use a very small position size, and then you can always add to it as it goes in your favor. All right, a couple more. Next one is Red Hill Biopharma, and their specialty is gastrointestinal diseases. Another thing, and by the way, this is an Israeli drug company, that's another thing that's been going up in the age of COVID because people aren't eating well. So, you know, a lot of this stuff, we're so focused on a vaccine for the virus, but there's this other stuff to look at that I'm finding so interesting. Anyway, that's RDHL. You can see it had a golden cross here, went into a bullish phase. Talk about your consolidation. Here's your consolidation point right here. So you could be a little patient with this. It's underperforming, and it also is showing a small divergence. It's breaking back down under the 50 on the real motion. You want to see that hold. But more importantly now, you want to see this get back over the 50-day moving average as a start. But I would say even more so, let's clear all this congestion here. So somewhere around 750, this stock starts to look interesting to me. And then last but not least is not this one, is this one, and this is Silicon Motion Technology. And basically this is another Chinese company, and what they do is they have flash controllers for solid state storage devices. So what this does is actually oh, excuse me, I'm sorry, that is totally wrong. This is SGMO Therapeutics, and basically also a biotech that does gene therapy. Originally I had a stock up here called SIMO, which was from Hong Kong, and I probably should have added that one, so I apologize. But nonetheless, this is SGMO Therapeutics. Take a quick look here, over the 200, golden cross here, over the 50, nice momentum going on here. I like here, we're going to run into some resistance right here at 11, so watch it at 11. If it busts through 11, you've got about $1 risk to the 50-day moving average under 10 to see. You don't want to get a one-to-one, of course, but you want to see if you buy it over 11, if it can get to 12 and higher. The high of the stock was about 12.50, but based on this formation here and the momentum here, it's possible that you can get a 2-to-1 on this one. And that's it. So I hope you found this information helpful. Again, always ask me questions on YouTube. I'm happy to answer them, or find me on Twitter at Market Minute. Thanks so much for watching.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.